I'm Alan Kenny, Editorial Director with REIT.com, and we're in New York for REITWeek 2015, NAREIT's Investor Forum. Join me is Michael Schall, President and CEO of Essex Property Trust. Michael, you and I talked about 6 months ago back in Atlanta for REIT World, and you were telling me that the apartment industry is a momentum business. Has momentum carried over into 2015 for your company?
You know, this is just a great time to be a landlord, especially on the West Coast, and that momentum has indeed carried into 2015 from 2014. Evidence of that is in our first quarter, which we announced recently. Our same property net operating income was over 10%, which is a big number for apartments. And we credit that to a great job environment, a lot of tech companies on the West Coast bringing jobs to the West Coast, and a favorable supply-demand relationship.
And there haven't been any deals on the same scale as the acquisition of BRE Properties, but we've still seen some smaller kind of portfolios and one-off assets coming in. Are we going to see more of that deal making going on the second half of the year?
You know, I suspect that BRE will be one of those once-in-a-lifetime type of opportunities for the company. The locational synergies and property synergies were just too great to ignore. And so I doubt very much that we'll see anything like that in the near future. And having said that, we built the company largely off single asset acquisitions and really trying to grow cash flow, net asset value, and improve the growth rate of the company through property acquisitions, and we've been able to do that. So I think we're going to go back to just our core basic business model of growing via acquisitions. We've targeted $600 million in acquisitions this year, and I think we'll achieve that.
And of course, when an industry is as successful as the apartments have been recently, you get a lot of people trying to chase those returns. Are you feeling okay, though, about the balance between supply and demand in the apartment sector?
I do. I think it's very much in check nationally. And of course, we care much more about the West Coast. Apartments or real estate is a local business, and regional variations are very significant. And on the West Coast, we have the best of both worlds, very limited supply of housing being delivered into the marketplace, somewhere less than 1%, and at the same time, about 2% household formation or household growth. So we have a 2-to-1 demand over supply relationship, which is really why we're able to drive rents.
Well, thank you so much for your time.
Thanks. Great to be here.
And for more on this and other REIT news and analysis, be sure to visit REIT.com.